Okay, let's take a look at exercise 10-20 or non-monetary exchanges. Ashbrook has negotiated the purchase of a new piece of automatic equipment at a price of $8,000 plus trade-in FOB factory. Ashbrook paid $8,000 cash and traded in used equipment. The used equipment had originally cost $62,000, had a book value of $42,000, and a secondhand fair value of $47,800. As indicated by recent transactions involving similar equipment, freight and installation charges for the new equipment required a cash payment of $1,100. So prepare the journal entry to record the transaction, assuming that the exchange has commercial substance. Okay. For Ashbrook, what I need to go through and do is I need to say, okay, what was the value of the equipment? So the old equipment was $62,000. Book value was $42,000. So the accumulated depreciation on the old equipment, or what was being given up, was $20,000. So what I need to do is I need to basically over here, I'm going to credit equipment for $62,000. I'm going to debit the accumulated depreciation on that equipment for $20,000. Got to take that old equipment off my books. The next thing I have to do over here, they paid $8,000 in cash for the new equipment. Okay. Okay, and then I think what I also want to do over here is, because the freight and installation charges for the new equipment required a cash payment of $1,100. So I think what I'm going to do here is I'm going to record that separately. Okay. Okay. So now what I need to figure out is what is going to be the amount, what's going to be how do I value this new equipment? Okay, so has commercial substance, so I'm going to be recognizing any types of gains. So the amount of the value of the new equipment is going to be Ashbrook negotiated a price of $8,000 plus trade-in. Okay. So the price is going to be plus trade-in value. So the asset record is going to be $8,000 cash. Trade-in value is at $47,800. So here, the new equipment should be recorded at $55,800. So if I look at this, I should technically have a gain of $5,500. So if I'm saying that the value of this equipment is cash plus the trade-in value, which is $47,800, then over here, my total amount, my gain on the disposal of the equipment is going to be a difference of $5,800. Okay, so let's see if that is correct. Okay. So the book just did it a little bit differently. What the book did is they combined this with up here. I'm just reporting them separately, because if that's a separate deal than that, but we're getting essentially to the same value. Okay, so prepare the journal entry to record the transaction, assuming that the exchange has commercial substance. Assume the same facts in A, except that the fair value information in the assets exchange is not determinable. Prepare the journal entry to record this transaction. So when we're going through over here and we're looking at this in terms of, what I would first have to say is that if the transaction does not have, if it's basic over here, the amount of the cash is not if we can't determine, so taking a step back here. So does this transaction have basically assume the same facts in A, except that the fair value information for the assets is not determinable. Prepare the general journal entry to record this transaction. So I would say that the transaction lacks commercial substance because what's being given up, even if we say over here 42 and 8, this 8,000 is still less than the total amount of, this is less than 25% of the total amount of what's really being given up. So in this case here, what's going to happen that's going to be different? So if I cannot determine the fair value information of the assets exchanged, if I can't determine this value, what I'm going to do is I'm going to defer I'm going to defer any type of gain. So here, let's kind of walk through this. I'm paying $8,000 cash. I have to get the old equipment off of my books. So I'm crediting equipment. I'm debiting accumulated depreciation on equipment. I'm giving up $8,000 cash here. So the value of the equipment, not including the installation cost, is going to be $50,000. So, and how I'm going through and getting that, it is what I need to do to balance this equation. I have no gain or loss in this situation. The other part, I'm still paying for the installation. I'm just recording this separately because I like to kind of try to keep this as clean as I possibly can. So that is exercise 10-20. So there you go. Have a great day, and I look forward to seeing you on the next video. Have a good one.